Hey guys, what's going on? I'm going to do another analysis of Kaspa. Ticker for this is KAS, and I'm currently on the weekly time frame. Last time I did a video on this one, I think it was about 2 weeks ago. And at the time, the price was just retracing down to this horizontal support level that I have marked here. And I suggested now would probably be a decent time to get in because we had the confluence of this horizontal level of support, and it was kind of lining up with this upsloping level of support from this ascending channel. So the price was right around here. And if you took that trade, you could have had a pretty decent return. But as you see, the price came up and it got rejected off this horizontal level of resistance that I already had drawn on the chart. So just to recap, if you haven't seen my previous videos on Kaspa, I'll zoom out, and these are the levels that I recommend that you draw on your chart. And since we drew these levels on the chart, the price has really been respecting them, okay? So obviously, if you want to start with this upsloping level of support, the lower region of this ascending channel. I recommend that you draw that. Basically, just connect the lows of here, and here. Just connect the lows. And this is going to be in play if the price is able to bounce up from here or bounce up from anywhere and work its way back up, then this level that was once a support is going to be the resistance, okay? In addition to that, I would recommend that you do the same thing, but just draw from the tops of these highs here. So the upper line of the ascending channel, okay? So draw those because these will be relevant in the future as the price comes back up. Okay, now as for the horizontal levels that you see here, the first one, I would recommend that you draw it right at the tops of these two candle bodies right here. So just take the horizontal line, paste it at the tops. And the next level, I'd recommend that you draw right here. So just paste it right at the top of these two candle bodies. Okay, so you see it was resistance right here. When we broke above it, it was support. Broke below it and came up, it was resistance. Price came down from there. And let's see if we zoom out. When we can't, oh, this is where we broke above it, and this is where we are right now. So as you can see, this line here is still very, very relevant on this chart. Okay, so once again, just take the horizontal line and paste it right at the top of these two candle bodies. Okay, the next level, and it's kind of like a range. It's going to be, you know what? Draw it. Go here and just put it the top of these two candle bodies right here, up until the bottom of these two candle bodies. And you can take the rectangle tool and just make it a range, okay? All right, the next level up is going to be right here. Horizontal line, paste it right at the top of these two candle bodies. And then beyond that, take one more horizontal line and paste it below these two candle bodies. So these are the levels that the price seems to be respecting. Now I just noticed something as I'm looking at the chart right here. It looks like we have a head and shoulders. So we have a shoulder, a head, a shoulder right here, and we just broke the neckline. So when you see this happen, normally what you would do is you would measure from the head down to the neckline and then project that from the breakout point, and that would give you a target. So that would be all the way down here, right at the top of this line here at around 0.025768. Now, personally, I don't really place too much emphasis on the projected targets from these patterns. Instead, I just like to focus on looking for support and resistance levels just based on previous price history and Fibonacci retracement levels. So let me see one thing. I haven't done this yet. Let's run a Fibonacci from this low up to the high, and then see if we have any confluence with these regions here. Okay, you see right now, as the price came down from this high, look at where we first got the bounce. So there was so much confluence in this region right here. So we had this horizontal trend line just based on the price action. Then we had this upsloping level of support, and all that aligned with the 38.2 Fibonacci retracement level. So now that we've broken both the upsloping level of support, this 38.2 Fibonacci, and this horizontal trend line based on the previous price history, you'll see that this was a level that the bulls were trying to defend. We have this long wick candle body closed above this horizontal line, but then this 38.2 served as the resistance level once we broke below it, and then we came down. We came down to the next Fibonacci target, which is the 50%, and you see this is where more buyers stepped in. So we have this long wick where buyers stepped in and bought it up, but the price is showing a little bit of weakness right now. So if the price does end up coming back to this level, you can look to see if there's any sort of like reversal candles forming. Look for a doji, look for maybe a bullish engulfing or something like that. But given the looks of this, given the fact that we have a breakdown of this head and shoulders pattern, and if we come down to test it once again, the likelihood that it's going to break on the second and third touch is going to be higher than the first one. So more often than not, when you come to these significant levels on the first time, whether you're approaching it from below or above, the first touch, that's where most of the buyers are going to step in. The more often you test it, the more likely it is to break. Now, if this level breaks, the next level down is going to be this golden pocket range. You have the 618 and the 65%. And it's interesting that this 65% retracement level lines up perfectly with the trend line that I just recommended that you draw. So I'm going to get rid of the fib and look at this right here. If we look left, it lines up perfectly with the horizontal trend line that you drew based on the top of these two candle bodies and this one right here. So yeah, this would be the next level down that I would look to if this horizontal line breaks, okay? And this horizontal line I have at 0.031814, next level down. And this is where, if the price does come down here, this is where I'm going to look to enter a long position. And that's 0.028014. So if the price does come down here, what I'll do is I'll enter a long position. I'll place a stop loss just below here. And my take profit is going to be basically around where we are right now, the current level of support. So let's see what that would look like if I take the long position tool, if I'm able to get an entry around right here, place a stop loss just below. And guys, I'm going to wait for the daily candles to close before I enter because, obviously, the price can come down as a wick. So I want daily candles to close above this line, and I'm going to look for the candle body to close above the line before I consider entering a long position. And from there, I'll take my profit right here. So this particular trade setup would give me a 1 to 3.42 risk reward ratio. I would risk 3.59% to potentially get over 12% to the upside. That's a high probability bounce area with a very tight stop loss and a very conservative price target just up to the current level of support. And I'm going to anticipate that this is going to flip to the resistance. Okay, so now I'm going to change the time frame. I'm going to move it out to the weekly, and I want to show you something with the oscillator. And what I'm going to show you kind of gives us an early warning sign that the momentum is giving out. So you see now we're breaking down from this upsloping level of support. But look at the price. See how the price has, we made a high here, came down, then we made a higher high. Well, on the price, look at the divergence indicator right here. So we had a high, and then we had a much lower high. So this is high time frame bearish divergence, right? So that kind of gives you an idea that, okay, the trend is weakening and you can expect maybe a pullback. But the last time I looked at this chart, it was about 2 weeks ago. And at the time, like I said, everything still looked good. It was right here. So those of you who saw that video and entered the trade, I hope you made some profits off this one. We did have this level marked right here as a potential level of resistance. And yeah, that's exactly where we got rejected from. But yeah, basically to wrap it up, we are currently at a level of support. And again, if this level breaks down, then I'm going to look to the next level down here, which I kind of think it's going to make its way down here if Bitcoin drops a little bit further. And that's around 0.028015. And this level here is where I'm personally going to look for a potential long entry, but pending a good daily close, candle bodies closing above this line. And of course, the actual projected breakdown target from this head and shoulders is going to be right here. I think that was around 0.025924, right at the top of here. So you can mark that in your chart as well if you want. That's going to be the breakdown target from this particular pattern. All right, guys, so these are the ranges. As for the exact direction, up or down, I'm not sure. All we can do is mark out the levels and take the trades that give us a good risk reward ratio as we see them, right? So just kind of adapt to the price action. I'm not really going to make these videos and say I have a crystal ball and I know exactly where the price is going to go. I don't. But what we can do is we can just find good trade setups in the chaos, right? Anyway, guys, that about wraps it up for Kaspa. Now, if you found this helpful, I would recommend that you subscribe just because this is a new channel. It's only around 1,000 subscribers. And if you leave the channel without subscribing, you may have a hard time finding it again just because I'm not really prioritizing the search algorithm. Also, if you want a place to trade Kaspa and pretty much all the other coins that I talk about, I put a link to the exchange that I'm currently using in both the pinned comment and the description. It's got a really nice interface, a lot of coins, and best of all, they don't require you to submit any of your documents, so the KYC process is completely optional. Anyway, guys, that about wraps it up. Take care. Have a good evening. Bye.